All right, good day. Just want to do a quick update on my AUDNZD long. Um, we just got the Australian labor market release as well, and so at first glance, right, what we can clearly see here is that the data is somewhat mixed, right? We're seeing 17.9K unemployment change, about 1.1 down from the forecast, and unemployment rate decided to stay steady. So employment growth came in slightly below expectations, while the unemployment rate held steady, right? Now, here's what's important. How did the market react? Because that tells you a more important story. And this is the story. The release was just not soft enough to materially undermine the Australian dollar. Right. So from a macro perspective, this is important because the market is not simply reacting to whether the headline beat or missed consensus by a small margin. What it is really assessing is whether the data meaningfully alters the RBA policy outlook. Okay. And at this stage, it appears to be no, right? We're actually heading for higher prices here after the mixed quote unquote data, which I agree, it's mixed. But from the market participants' narrative, that's not what they cared about. They cared about whether this will alter the RBA's outlook. Do we want to go hawkish? Do we want to go dovish? Now, it would have been really bad if we had a lot higher of an unemployment rate and a really crazy negative unemployment change, probably. That by itself would have caused RBA to probably shift its policy outlook, right? Because that's the whole point of being dovish, right? You know, the central bank isn't just going to come in and cut rates unless they're sure or they have to, right? And right now it's a little bit dangerous to do that because of what's happening in the Middle East, right? Inflationary pressures is something that they're kind of waiting to anticipate for. Um, they don't want to make any kind of decisions right now, in terms of cutting rates. That's just out of the question, out of the picture. So overall, the labor market still looks resilient enough to keep the broader RBA narrative intact, basically, right? So, in other words, this report does not represent a meaningful deterioration in domestic conditions, nor does it materially weaken the argument that the Australian policy can remain relatively firm. Okay, so in the context of AUDNZD, that matches a great deal, right? Because it's really a fundamentally, it's fundamentally a relative macro trade. The question is not whether the Australian data was spectacular, right? Like I said, it's just the real question of whether Australia screens better than New Zealand on a relative basis across monetary policy, growth resilience, and overall macro momentum. And what we can see is that the Kiwi dollar still has an employment rate of about 5.3%, way higher than Australia's unemployment rate currently, right? So in my view, RBA remains comparatively more hawkish than the RBNZ. Okay. Australia continues to offer the stronger rate structure, right? 4.1% against 2.25%. And the growth dynamics still look softer on New Zealand dollar. I just feel that the recovery profile remains less convincing, and that's what the market participants are also looking at, right? Market is forward looking. They have ideas. They have they don't just look at the data. They have a context along with that, right? And that's what we're seeing right now. So, and I mean, just to add to the broader and external backdrop, right? Risk sentiment has been relatively stable, right? Equities have been holding up. That environment tends to be more supportive of the Australian dollar because Australian dollar is considered a risk-on asset. Um, usually New Zealand dollar as well, but right now Australia is clearly winning against the New Zealand dollar, right? It's a lot less robust. Um, so I mean, looking at the S&P 500 as well, what's interesting to see is, yeah, that's what we're we're getting. I believe we just took out the daily highs, right? This is crazy. We completely recovered from. We've been seeing a lot of this V-shaped recovery. We saw it in the tariff as well, but this is just a way sharper move. Obviously, this is a lesser backdrop compared to the tariff days, but just in literally 13 days, roughly, we've completely recovered from all of this bearishness since I want to say the start of the year or towards around January. So yeah, guys, that's just where we're at, man. Um, Also, something interesting that I want to bring up was the put to call ratio for S&P. I use this as a contrarian signal, right? So this is where there are high put volumes right here, and there are high call volumes right here, and right at the high put volume last was at March 31st, 30th. And guess where it bottomed at? March 30th. So when there's high put volume, that seems to be when price, and now this is not guaranteed, but this is what I've seen, I've noticed is that price tends to actually reverse um, from that. And now what we're seeing is really, really crazy high volume, high call volume right now. So could we be on track for a potential reversal? Yeah, probably. Um, that's probably what we're going to be seeing. So, anyways, those are my takes right now for the market. AUDNZD, I mean, look, if we can get a pullback to this level here, I think this is a great area of resistance for potential scale-ins. Like I said, overall technicals wise, because I know you guys like technical analysis, we're in an uptrend, right? Bullet structure, we're above the 50 and 200 AMA. We're holding this trend. We're bullish, guys. Simple as that. All right. Okay. Cheers.